Hello traders, Gary Wagner here. Approximately 2 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, the second day of March 2021, and this is the daily report for gold and silver. Although one day does not make a key reversal would begin looking something like this. We had both gold and silver trade to the lowest trading price in quite some time and then reverse, closing positive in both of those markets. As you will see when we look at our technical studies, it does indicate that potential, and we'll have to see how this unfolds. Hope you enjoy today's show. Gold traded to a 8-month low when pressure in Asia took pricing to $1,704.60 before recovering dynamically and then closing in New York with net gains of $13.90. Currently fixed at $1,736.90, a net gain of 0.8% on the day. Moving averages are inherently lagging indicators. Even with today's respectable gain in gold of almost $14, we did get a cross between the shorter-term 100-day moving average against the longer-term 200-day, as witnessed on the chart we are currently looking at, a daily candlestick chart. We also can see the gold traded to a lower low than it is hit, taking it to an 8-month low in overseas trading last night, and then scoring a very respectable recovery. However, when we look at gold pricing through a Henkinashi chart, which creates its candles by using the midpoint of the prior day as the open of the current day, we can see that over the last 3 trading days, we still have large red body size with no upper wick, which tells us that at least for now, the overall trend remains bearish. On a technical basis, we would need to see an effective close above $1,750 to $1,760. That is the 50% Fibonacci retracement level before we would get bullish on gold. We remain neutral to bearish on gold. However, we must also note that today's candle created a simple 2-day candlestick pattern called an engulfing bullish pattern. That occurs after a defined downtrend. We certainly meet that criteria. We have a red candle in which the body of the current candle, the green candle, completely engulfs the open and close, the trading range of the prior day. When we look at engulfing bullishes or engulfing bearish patterns, we're not looking at the wicks or tails of the candle, but rather comparing body size to body size. If we had another strong update tomorrow, that would create a confirming candle, which would be a long green candle with a higher high, higher low, and higher close than today's candle, and that could indicate that we are witnessing some sort of key reversal, but as for right now, it is a little too early to say that. Silver also traded under pressure in Asia today, trading to an intraday low of $25.82, scoring a dynamic recovery and closing up approximately 18 cents. And is currently fixed at $26.86. When we look at a daily candlestick chart of silver, it still is apparent that on a technical basis, we're still in a defined bullish trend, even though Friday's action took market forces on an intraday basis below the 50-day moving average. You can see that it closed just at the 50-day moving average. Then yesterday, we had a doji-like candle with the low finding technical support at the 50-day moving average. And that was followed by today's activity in which we have a single candlestick that is very close to being what is called a hammer, which could be indicating that we will witness higher pricing in the next couple of days. But it also must be noted that we continue to see silver prices in a narrow and defined range between $26 and $28 since the beginning of February. Palladium gained $12 in trading today, although it was the smallest percentage gain on the day, is still king of the hill, currently fixed at $2,361. And then finally, platinum had a very respectable gain, leader in terms of percentage gains today, gaining $17.90 and closing at $1,209.20. Although today's respectable gains in the precious metals complex does not mark a key reversal, it does indicate the potential for one, because this is what the beginning of a reversal would look like. Specifically in gold and silver, we saw them trade to the lowest price point in quite some time. In the case of gold, that was 8 months, and then reversed strongly as buyers sought to buy the dip. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.